Hi, welcome to this video day, which is on Thursday, the 8th of November. Just going to look at one of my favourite types of trade setup, and I'll go to the chart in a moment. The example we're going to use is Euro NZD, and I think the Euro is due a rally of at least 300 pips, maybe even 500 pips from current levels. Now, I did a video on it just a few days ago, and I wanted to buy the Euro on strength, and thought it was a really good setup then, but it promptly dropped by more than 150 pips. Now I want to lower my entry. I think the probability on this trade has increased. Okay. Now what we are going to do is go to the chart, and just when I'm analysing the chart, do keep in mind it is my view. As of right now, it can change in line with the market conditions. If you want all our trading techniques and our daily technical analysis of 14 major Forex pairs of our entry, stop and targets, you can just simply click on the link beneath this video and get live access to our member center. Right, let's go and take a look at the chart.
Right, on the chart of Euro NZD, nice big fall there of about 1,000 pips. I'm going to draw my levels in a moment, but my last entry was going to be up here at 171.50. Look at us now, we're down at 169, so we've dropped well away from where we thought we would get a really good risk to reward entry. I think it's even better now. Draw the levels in a moment. I just want to look at why people are so enthusiastic about the Kiwi. Media's got very bullish. Let's take a typical quote. New Zealand dollar has probably started a new uptrend on the back of a series of bullish fundamental catalysts. That's from PS Live. Typical quote. What are the bullish fundamental catalysts? Well, we've had decent economic data out in New Zealand, but the RBNZ have said there'll be no rate rises until 2020. That's a long way off, okay? But they won't need to cut them either, okay? And that is really what has caused the Kiwi to rally on just about every major currency, because the market was heavily short the Kiwi. It's just a classic short squeeze. People have to buy back their short Kiwi positions or buy back their short Kiwi positions. That boosts the NZD everywhere. And there's a lot of pairs you can look at. I just particularly like this one. But in terms of how we're going to do the trade, well, basically, we'll start with the Bollinger Band first of all, because it's a very useful tool in measuring peaks of greed or fear. Now, you've got a 20-day moving average in the middle, okay, a simple one. Smooth out the day-to-day fluctuations of price. The bands just show you how volatile price is. Further they are apart, the more volatile prices, the narrower they are together, less volatile. So here in the middle, small candles, bands very tight. Here, when you get this big fall, bands nice and wide. Now, normally you'll stay pretty close to this mean price. You see, it doesn't get too far away. Sometimes it does. Okay? And generally price spikes tend to fade. And it's like a reversion to the mean trade. You're looking for prices to gravitate up towards here, which is 174 level. I personally think we could go a bit higher. So, how are we going to play the trade? $169 support. It's a round number, and you got candle poke 2, 3, 4. Then we're off. Yeah. Now, round numbers tend to be very significant in Forex trading. Did a video a few days ago. You can actually just trade off round numbers. I know plenty of traders who do. Now, in terms of this round number here, obviously orders are normally grouped around a round number. I think we could take the number out, okay? But the price wouldn't be sustained, would quickly come back through. What I want to do is, you see that poke there? Just at 170. I don't need a trend line. I want to come through that round number and buy 30 pips above it outside of turbulence, okay? If you don't know what turbulence is around round numbers, it's just basically there's a lot of order flow. You really need to get past 30 pips most of the time of a round number to basically confirm your bullish view or confirm my bullish view. So where could we go to and where we're going to put our stop? Well, in terms of where I think we're going to go to, above the 20. I think you obviously got to manage the trade as it goes, but we'll see what happens. We come down here, a little bit of sideways, and then a really steep fall. We should come back up, okay? So if we're coming through 170.30, where do we want to put our stop? Well, if we go through the number, okay, I'd be back behind this level. I wouldn't be, 10 or 20 pips. I want to be outside of turbulence. So I'd probably be 50 pips back, okay? So you're going to risk about 180 pips, but you've got great profit potential on the other side because you've got well over 4 to 1, okay? Also, what you've got is if this does move up, you are going to get quite an aggressive rise, okay? So it should move quite quickly to the upside. Then you can bring your stop in tighter if you wish. You can use a tighter stop if you want to, but I just tend to use slightly wider stops. But for me, it's I thought it was a good risk to reward trade when I did the last video. Market makes you look stupid at times. So, of course, we've dropped down. Now I think the probability is even better. So we will see. I like it. Also like GBP, NZD as well. Plenty of pairs with New Zealand dollar is overbought. This for me a really good one. Thank you very much for watching me as usual. Take care. Have a good day.